Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. Joining me today from Dallas, Texas is Mike Traeger. Next week, I'm going to put Mike's picture up here, guys, because he jumps in when he can, and it's always a pleasure to have Mike, my kind of research partner, and working with us. He always has some exceptionally bright ideas and also an exceptional overview of the macro of what's going on in the market. How you doing, Mike?
Oh, good morning, although it's just turned afternoon here in Texas. But thanks for the kind words, Dennis.
You're very welcome, Mike. And the question is one of the questions is David Grandi going to be joining us? I don't know. Dave's out discovering something else that he wants to be doing, and that's cool, and that's fine. And so we wish him well if he wants to come back. He has my email address. So this has been kind of a hectic week for me, Mike. We were all posed to for the potential delivery of our first grandson. We already have a wonderful granddaughter, and it turned out to be a little bit of a false alarm. But we're still on the ready for somewhere between now and about the 15th of May. My daughter-in-law said that she would really love for David to come on the 10th of May, which would be, of course, Mother's Day, but also it would give his birthday 5, 10, 15, which would be kind of cool, I guess. And so anyway, I want to remind everybody that all the materials we present are for training purposes. Traders should paper trade any new method prior to the risk of their own personal capital. At the Active Trend Traders, we really believe in teaching folks how to trade a system. The Active Trend Trading System has been proven over time. And this past week, we made a presentation on how to build up a small account and gotten really, really good comments back on that. We presented an ideal way to do it. And, as if everything was perfect. Now, of course, if somebody does adopt that particular strategy, which is based off the Active Trend Trading System, will we get an absolutely perfect return? Not necessarily, but even if we only half what we are projecting, that would still be a great return. This week, we'll be talking about the Active Trend Trading rules with the whole moving average. I actually have been corresponding with Alan Hole down in Australia and have invited him to join us on one of our Wednesday night sessions, Mike. And I know that since the introduction of the whole moving average, you have kind of liked what it's done from a predictive standpoint, Mike?
Well, I fooled around. I learned a little bit about it a few years ago when I was day trading, and I fooled around with it a little bit, and it is so remarkably reactive. I mean, one of the problems with moving averages is that they tend to lag a little bit, and the whole moving average does not really lag much at all. And it almost spooked me or scared me that way, and so I sort of discarded it and threw it away because it was so sensitive and so different. I was having a hard time wrapping my mind around it, and now that we're coming back to it and revisiting it, I'm finding it again really interesting and really remarkable.
Yeah, that's so am I, and I really think we vetted that. And hold on just a second, I have to answer a question. There we go. Okay. Yeah, so am I, Mike. I'm just really remarkable, and I like how it works across different time frames, both intraday, weekly, daily, weekly charts. And so here's where we were last week. Basically, it appeared as if the tech stocks were going to take off and run forever. They were launching out, really significantly on the NASDAQ and the composite. However, the S&P was at resistance, and Russell tried a little bit of a breakout, kind of, but it didn't do so well. What have we had this week? We're in the process week of basically resetting. It's either going to be, we're resetting back down. Stocks have been selling off, and so the question we come up with, are we resetting or worse? The S&P has found support at its 50-day moving average, but the weekly charts look very weak. NASDAQ is the strongest, bouncing off the 50-day moving average, but also we'll take a look at the weekly charts in a little bit, and you'll see that there is some, I would at least say, bearish overtones to each of these. And then, of course, the Russell. The Russell appears to be making a move similar to what it did last year of disengaging from the other indices and going to be kind of doing its own thing. Now, that doesn't mean that we're not going to get some wonderful trading opportunities with the Russell, trading either IWM or the TNA. But the Russell may be out there starting to do its own thing. Earnings continue. We see in the earnings, Mike and I were chatting about this a little bit earlier, is that, would you say, Mike, that currently for earnings we're in an unforgiving environment, and that because as we saw, LinkedIn got hammered. And what the LinkedIn earnings were okay, right, Mike?
Well, yeah, I mean, the quarter, the previous quarter that they're reporting on, I mean, their results were excellent. Their guidance going forward is a little bit shy of what the Wall Street analyst guidance is, and for that reason, if nothing else, the stock just fell out of bed today. And I've mentioned repeatedly over the last few weeks, that the concept and the issue of valuations in the market, and for some of these stocks that have these PE multiples that are just completely off the charts, and LinkedIn is one of those. If they don't live up to expectations, I mean, they're going to be brought back down to earth pretty quickly, and that's part of what's going on in that particular instance, I think.
Yeah, and because I know that we saw, what was it? Starbucks a couple of weeks ago when they reported, or a week ago when they reported, had some of the similar type of pluses and minuses to their report. They did really well for the quarter, then made some negative statements, but they were rewarded. So I think the other two terms you used with when you were describing it was basically that the market is apparently arbitrary and capricious in who gets rewarded and who gets punished.
Yeah, and that's part of the risk of dealing with individual stocks, especially around earnings reports. I mean, it can be a really good report and be totally unrewarded or totally rewarded. And there just seems to be not a whole lot of rhyme or reason to it.
Yeah, and one of the other thing, of course, is we had the Fed meet and came out with a report on Wednesday. So the interest rate tango continues, where and this what I call down here the aspect of good news inversion or whatever is good news equals bad news and vice versa. And then, of course, we are coming into happy May Day. I chose not to go downtown San Francisco and Oakland today for the demonstrations, but that's another story we won't go into right now. But the old adage of sell in May and go away, of course, always comes up. Do you do that, or do you keep sticking it out trying to find a couple of good stocks and or the ETFs and playing on the what I call them playing on the margin on some of the shorter term moves? And then secondly, are we also going to be moving into the summer doldrums? And these are all speculative. We don't know. But I know that last year, even though some of the summer months, there was some challenges in there, there were individual stocks within those time frames that did exceptionally well. And that's what we're going to be continuing to look for. It's kind of like what we're doing with YY. right now, and we've got a couple of other ones that I'll be mentioning before the show's over, considering that. But what do you think about the sell in May, go away? And you did make a couple of statements earlier, Mike, about this has been a very challenging market, and getting whacked because the moves are so short termed.
Well, it's just been a very sort of choppy sideways market since the first of the year, and if you're trying to actively trade that, it's a very challenging environment in which to trade. You can get whipsawed around quite a bit, and so you can have one of two ways of approaching that. As a trader or an investor, you could say, I'm tired of being whipsawed around. I'm going to step aside and sit this out until there's some, direction that makes itself evident in one way or another. Or, I'm going to go for very, very short-term, very small moves and accept the fact that, I'm going to get whipped around a bit. And that's up to the individual.
Yeah, and you were saying, part of the thing we presented on Wednesday night this past week was growing a small account. Well, that's a particular strategy where you're doing diagonal calendar spreads on leap options that are out there, like in January 2016 or even going on to January 2017, and then basically just utilizing the intraday charts and the weekly charts and the daily charts to time an entry to sell premium against those. And for right now, that's been a pretty good strategy to use with how the market's been just kind of locked in this sideways movement over the last little bit.
Right. Or, if you want to get into option strategies when, if you're in a choppy sort of sideways environment, and I'm certainly no expert on it, but, you can look at and learn a little bit about, doing iron sword trades.
Yeah.
Which, with just time decay, tend to be beneficial.
Yep. So one of the charts one of the indicators that we like to use for timing purposes is, of course, this percentage of stocks over the 20-day moving average on the NYSE. And as you can see, last week we were up here. It was, had come up most of the week and was pushing a little higher. And we had mentioned the concern about this sideways market where if we get just stuck in this little middle here, bouncing between 45 and let's say 68 up to 70, that this is just a meat grinder kind of operation. Well, what do we see going into today? As of today, we're actually, Mike, we've actually almost dropped down to the lower reversal zone, down in the 30% level of stocks above their 20-day moving average. Again, do you think because what we were seeing in the indices was that we were seeing fewer and fewer stocks participating in the rally, that when this let go, it will let go with more velocity?
Yeah, that's a good point, and I've never looked at it that way, so I don't even know that I should try to comment on that. For my purposes, and also for purposes of the early warning alert, system, this particular indicator is best used at its extremes, and anything in between those extremes is just kind of no man's land. And certainly in the overall bigger picture point of view, there's been over the past several months and even over the past several years a marked notable negative divergence between the lower highs in these indicators and the higher highs. At some point, divergences will reconcile themselves.
Yeah. Mike, you still there?
Or the indicator moving up to meet the price action. And
so, yeah, hey, Mike, you're cutting in and out a little bit. It may be
seeing the beginning of. talking on the phone. I'm trying to speak directly into the speaker on the phone.
Yeah, okay.
Anyway, the point is that we may be seeing the beginning of the price action in the indexes beginning to reconcile this divergence.
Yep, I agree wholeheartedly. And so, and what Mike was saying, guys, because we've talked about it before, is he's taking a look at some of the longer term charts of indicators that are like this particular one that we're seeing over here, and this divergent of lower highs as the market has gone up is also observable over a longer period of time, more than just the few months that I have showing on this indicator.
Yeah, absolutely. I mean, if you look at some weekly charts and going back over a period of 2 or 3 years, and longer term, percentage of stocks above longer term moving averages, you'll see a very notable situation there. That's kind of interesting, I think.
Yeah, and it's kind of, if we recover out of this current little, I mean, right now we have to treat these little pullbacks, especially on the S&P and the NASDAQ, is simply that, a pullback to a level of support and then a potential bounce. And that may continue. That's what we may be seeing happening today, at least on the S&P and the NASDAQ and the NASDAQ 100 and the NASDAQ comp. And so we will see what transpires after this. So let's take a look at the S&P. The S&P basically, and here's what we were talking about, is like earlier in the week, it stuck its head up above this well-defined resistance zone, stuck its head above it. This was on, I believe, Monday, but it couldn't hold the breakout and fell back into the resistance zone and actually put in a bearish engulfing pattern on Friday's candle. And then in the next 4 days, Tuesday, Wednesday, Thursday, Friday, or Tuesday, Wednesday, Thursday, actually got some really good selling action going. What do we have? What's our indicators telling us? One, the true strength indicator, yes, is pointing down, but it is approaching the zero line, and occasionally it will. That's kind of a line of demarcation, and if it bounces off that zero line, then we could see a little pop back up. We still have on every one of the indices, we have a very well-defined top of the resistance zone, and we'll see if we get back to that or just stay a little bit shy of that, because we could see a little bit of a pop, but look here at the momentum. The momentum actually has dropped below the zero line, which tends to mean that we're going to basically have some more downside. Looking on the weekly charts, and if we close just a little bit lower on the weekly chart, the candlestick that will be provided will be a dark cloud. Dark cloud, if you apply candlestick technology, typically resolve to the downside. But again, we have some strong levels of support also coming into play. I've drawn this line, the support line across here, and also we found a support down at the 2080 level on the S&P. Weeklies, again, flatlining on the momentum, a little bit of flatlining on the true strength indicator, and the stochastics have in fact turned over. And the last time that's happened, now occasionally you do get these kind of false signals at the upper level with the stochastics where it does turn over, but as you can see, prices keep pushing up. And in actuality, you kind of like to see this kind of thing, because of what it then sets up is a negative divergence, which then gives us a clue that we're going to get a more significant pullback. You got any comments on this, Mike?
Nothing beyond what you've already noted here.
Okay. And one of the things that I like to do when the market is looking like it's getting a little weak, I want to know how much it is pulling back. And so far, the full pullback on the S&P as of yesterday, taking the low of yesterday, was about 2.28%. How are we doing for the year? If we go over here to where we closed, the NASDAQ, the S&P is actually up about 2% for the year. NASDAQ. NASDAQ looked very strong coming out of last. This is gap up with Friday. This is Amazon. This is Apple. Apple's. I know we've beat the Apple horse to death with regarding, are they now too big now that they've joined the Dow, and will they start acting more like Microsoft than as far as an active growth stock goes? But we get the bearish engulfing on Monday, and then the long tail show that, hey, buyers did come in and try to support this index with the stocks that are on it, and we continue to fall down. We fell all the way yesterday to approximately the 50-day moving average, and we popped back up. This resistance zone is back in effect since the breakout failed. So this resistance zone will be back in effect. What do we have going on here? We have basically, yes, sloping downward on the true strength indicator and the momentum. We still have a little bit of an upswing with the weekly momentum here, but as you can see, as we were making those new lows, our true strength indicator was with a negative divergence, and the stochastics, which are looking to be turning over, are also negatively divergent. This would be the same kind of candlestick, a dark cloud on the NASDAQ if we close just below the halfway mark of this large green candle here. Right now it is finding support at the, about, let's say 4,400, 43.95, 94 level. And that's where we got our first bounce, and that's approximately right here. And so, Mike, I know you weren't very excited about the market, or you didn't trust the market, about a month ago. Has that changed?
No, it hasn't.
Okay.
Well, I mean, I don't trust it, or I don't like it to the upside.
Yeah, and that's another thing I just want to point out here is we now have a real good level of up here at the 45, 50 level approximately of strong resistance. And so this resistance zone that we show here could actually be broadened up and to take into consideration all these candles and this up here. But it's almost like we need to get another breakout above here. Again, it could very well be just a pullback to the moving average and a bounce higher. And so that would not be a surprise to see it bounce a little higher. And we'll see what happens when it gets up around, let's say, the 25, the 4,500 up to the 4,520 level. And if it slows down here and rolls back over, that could potentially indicate a change of character, because the character of the markets and the indices, especially the S&P and the S&P and the NASDAQ, had just been these very short, concise, real quick correction and a real quick return. Here's the Russell. Let's take a look at the Russell. The Russell currently is, from the end of last year, up about 1.63%. And again, it also has a very well-defined resistance zone up here above the 1250 level. And we have found support currently, at least, at just above the just below the 1220 level, down to about 1215, and that also coincides with approximately, this is the 40-week moving average, which is this is the 20-week moving average, which corresponds approximately to the 100-day moving average. So I've removed that off of my daily chart because I've added the whole. I know you made a comment earlier, Mike, when we were chatting about how the whole really worked well on these indices when it broke down on Tuesday, and then it has basically, that has been reflective. It changed color, and then it hasn't been able to get back above the hull for the last 4 days.
Yeah, well, like anything else in trend following methodologies, the change in color on the whole moving average, and you're using an 8-day whole moving average on your charts. Once that changes color, it potentially, it doesn't happen every time, but it can happen. Potentially, it can be the profitable, relatively long-term trend, which can go on for, weeks on a daily chart, and potentially even months on a weekly or a monthly chart. And, we don't know what the future holds, but if that is one of the indicators that we're following and acting on, when you catch one of those moves, it can be truly remarkable.
Yep, and we're going to show an example on the UCO suggestion that was made back in March on how well it has done, and we'll show the chart on that. So I got a couple of questions. Is there a problem trading QQQ because of Apple and other big stocks in that index? Is there an ETF that is weighted differently? Well, QQQ is the index or the ETF for the NASDAQ 100. Dorothy, I kind of stick with trading that either QQQ or TQQ. QQQ has the better of the two options because it's the non-leveraged ETF. And then, do you know when your article will appear about Hull in Forbes? Dorothy, that'll appear after I finish writing it for Forbes. Now, the first article that is being proofed and will be hopefully published next week will be about if you want to catch big fish, fish where the big fish swim, which goes back to the some of the research that I've done on the IBD 50 and how it has continued since 2007 and before, but my research goes back to 2007 showing that it is an excellent place to find stocks and a significant percentage of stocks from the initial list of the year that do better, much better than the S&P. Mike, would you be a buyer of the Russell or IWM or TQQ or TNA right now?
If I were so inclined, I again would repeat that in this kind of market environment, if you want to buy this, you should be looking for very short-term positions and taking relatively quick small profits on them.
Yeah, because I'm just going to pull up TNA really quick to take a look at that because it's up to 83.63. A little bit slight. And this also points out how slightly different while TNA does emulate the Russell, it doesn't necessarily directly. A couple of things that I'm looking at is, if we finish today with this particular candle on the TNA, it is a bullish harami. Huge bearish engulfing pattern, both on TNA, Russell, and the IWM. But if this is in fact trying to hammer out or show at least a temporary bottom, what's the potential? Well, the potential is basically a move back up to approximately where the probably 50-day moving average will be in several days from now, which will basically be up about $87. Now, I mean, that's a little bit over $3 gain, but it's got to be really quick. And so,
since we're looking at the indexes, here's another little factoid maybe to make people aware of, and it comes from IBD. Since you did mention IBD, I think that this week, or maybe the past week and a half or so, we've had 3 distribution days in the S&P. at least distribution days as IBD defines them. And, that's in and of itself pretty remarkable. I mean, you get 3 distribution days in a week and, clustered that tightly. It's usually not a real good sign in the intermediate term.
Okay. Yeah. And so anyway, so here's where we are. Now, if we hammer out a little bit of a bottom here, that might, over a couple of days, and this apparent support here between here and 80 hold, then yeah, I mean that may make it a little bit slightly different. But as Mike has said, you look at TNA and you look at IWM, we have taken out some of the major swing lows and broken down, and we're just holding right here. Again, look at this huge. I mean, this bearish engulfing pattern, if it holds for today, has taken out basically taken out 1, 2, 3, 4, 5, 6 days, 6 weeks worth of trading, and almost 7 if you want to include this one here. And so that's a pretty significant move to the downside. So we talked about charts. The active trend trading system, just want to remind everybody that what we do is we try to get out a list of stocks that can be traded, top quality IBD growth stocks and or index ETFs. We, through the training, provide the information about where to enter, where to exit, and what strategies to use and what to expect. Here's some of the stocks were highlighted this past week. YY is one we have been trading now for about a 2.5 week period. SWKS reported earnings last night, is making a nice little break up. LinkedIn, we chatted about a little bit earlier, got whacked. VDSI is one to keep your eye on. It is trying to hold support, and we'll take a look at a chart on that, but it is trying to hold support, so that may provide, again, if the market will participate, may provide something good for us. And so, Mike, this is the setup that we were talking about. It's basically the 3 times, is it 3 time or 2 time leveraged of the for oil?
It's 2 time leverage for oil, and it's based on, Bloomberg has an oil index, which is, Western, oil prices, and this is 2 times leverage to the Bloomberg oil index.
Okay, and let's just go through this really quick. I know that you highlighted this to our listeners back on the week of 3/18, and also I think we highlighted that Friday, which was 3/20.
Yeah, so, actually, I think I was a little bit later than that, but I think I was a week or so after noticing the big candlestick, maybe around the 24th or the 25th. But my memory could be faulty.
So, looking at this chart, what would you like people to walk away with after seeing this chart?
Well, this is something we can look at that's current and in real time and very recent time, and we know what the rules are for the active trend trading system. In terms of using the candlesticks and the 8-day EMA, and so looking back just at the recent past few weeks, we see that big, huge bullish engulfing on the 18th. And we finally get a close, not using the whole moving average, but using the EMA. We get a close, I believe, above the 8-day EMA, finally around March 24th.
Yep.
We get a close back below it on the 31st, but the low of that day, the low of the 31st, never gets violated. So we never get taken out of the position, and we now currently still remain above the 8-day EMA going forward until that breaks down. And the point being that if you pay attention to these rules, this potentially is how it can pay off. It doesn't happen every time, but it happens quite a bit. I think the return on this position from a potential entry of around, $6.80 per share. Currently, it's trading around, what's it currently trading at? About $9.50.
Yeah.
Approximately 4 to 5 weeks later. And that's a pretty good return for 4 or 5 weeks.
Yeah. And the other thing, look how once it gets above the eight-day moving average, which is the kind of bluish line here, then it just respects that and it just continues to move up. And I know that a couple of people were trading this and basically pulling the bounces off of the 8 and then selling it when it got back to the swing highs. And it wasn't huge returns, but it was very positive trading. And so since we are closing out the end of the month, here's where here are all the trades we've made. Basically, it's been a very quiet year for us so far. I expect the trading to definitely pick up over the next few weeks and going into the rest of the year. Well, we're up about $1,200 on our account for the year so far, and we're hitting about 50% win ratio. So that's basically all I've got for today, Mike. I got a question here about, are you going to be going into deeper on the whole moving average today? And Colwinder, no, we're not, simply because that's part of the active trend trading system, and that is part of what we provide our premium members there. But we are utilizing that. I will be probably doing a video that I'll post to YouTube that talks a little bit about it and how we're utilizing it. And the more I gain from understanding, not understanding, but the other additional insights that I'll gain from Alan Hall, I look forward to being able to share with folks. So with that, everybody, see you next week. Have a great weekend. We're going to review some stocks. Mike, you got any last and finals?
No, I don't. Just hope everybody has a good weekend and takes a look over the weekend at some of their longer-term, weekly charts. Yep. And even the monthlies, now that the month of April is closed out.
Exactly. Yeah, it is a good time to be looking at the monthlies. So, okay, folks, any stocks you want us to review? Mike, you going to hang around? You going to bug out?
I have to bug out, and I will talk to you later.
Okay, have a great weekend, Mike. We'll chat with you first part of next week.
Okay, thanks.
See you, bud. Okay, WAB. Okay, we are putting a lot of bandwidth through the computer today. Oh, wow. Okay, WAM, which is WabTech. What kind of... Okay. See, Judy, I'm not familiar with the stock, so I'd have to go back and do a stock checkup on it. I always check out the fundamentals on it, but it has been showing up some really nice patterns, and then we went sideways, and then looks like earnings dropped like a rock. It actually was a very bearish signal on earnings, but then today you get a nice little breakup after it fell back to the 50-day moving average and moved up. I don't know if you're in this stock, but if you're not in it, then you're going to probably need a little bit of a consolidation, or there is a pattern where it's called a doji sandwich, and so for the next couple of days, or on Monday, if you get a little small doji, that is a continuation pattern. If it moves above that, you can go ahead and put in a buy order just above that, and then of course your stop would be down here about midsection of that big candle. So I'm going to cover a couple of other stocks, and then I'll get back to some to be keeping your eye on. YY, let's see. YY has come out and, oh wow, not really great move this morning. They now have firmed up when the earnings are, which is going to be the 11th of May. And so if we do, in fact, break out here above the 67 level, then we're probably going up to the 72.50 level. We shall see. This has been a nice rewarding trade for us. But again, it goes back to what Mike was talking about. Look what happens when you get these nice little shape ups. We had actually taken this trade about on the 17th, which is approximately in this area here, and nice rebound, respects the hull, and then continues to push up and maintain this trend line here, and we're getting a rebounce up here today. Another one that is one I'm looking at is VDSI. VDSI is trying to make up its mind. Does it want to bounce from the 20, which is also this level here at about 2450, 2480 level, and then proceed up? Got a big breakout and sell-off after earnings. And so if we do this consolidation here, and because we see that buyers are coming in right at this $24.80 to $25 range and pushing it up, and we just need to get some more positives going with the momentum and also the true strength. We may get all the way back down here to this true strength to the 0 line and then rebound. Weekly wise, it's looking like it may want to weaken up a little bit, but we'll see. Amazon. Amazon is kind of interesting. Had a really big gap up with our earnings, and now I marked in when you have a gap situation, typically the midsection of the gap, which in this case was 416.80, is oftentimes a level of hidden support. And as you can see, we have come down to that level with a little bit of a flag, and so we want to be watching Amazon to see if we do in fact either consolidate or just do a rebound off of this level. The volume has been on a decrease, and so keep Amazon on your list. SWKS. SWKS reported after hours last night, had a nice little rebound today, but we still have this pattern going where it needs to break above that or retest back in here, but at least we have now gotten the moving averages heading in the right direction. We'll see what kind of volume we wind up for today. As you can see, momentum has started to swing up, and so has this true strength indicator. And last but not least, for the ones that I'm watching, is Baidu. And you might go, well, Baidu just got whacked with earnings. You're absolutely right. However, Baidu got whacked with earnings and has found support in a previous support area. It appears as if we finish today where we currently are, this would be a hammer and a bearish Harami. Now, I'm not going to say it's going to just explode out of here, but this may be where the buyers have said, hey, we're not going to let Baidu go below 200 bucks. So now let's look at some of the other stocks. How? So Dorothy, How just keeps on going. And so, yeah, Dorothy basically says that she was in to how I can't remember exactly where you got in, Dorothy, but I thought it was down here at about the 42 level. You've got a profit target about 51.50. What might we run into? It's basically you've got a level of resistance that's going to come into play about 50.63 and up to about 150-ish or 52. So anywhere in that area, I would look for it potentially to turn around. But right now, it's just continuing to, it's like the little engine that could. Okay, Apple. Apple, have we found support? Again, I will go over here. We know we have a strong level of support off the weekly charts. If I can not draw the oil, there we go. We've got a strong level of support right there. Now that should pop up over here on the daily chart. And we are approaching that. If we close today where we are, Apple is also put in a bullish harami. And so this may be a good place for it to, and where's it popping off of? It's popping off the 25 level, or correction, the 50-day moving average. And so it could very well be reversing. And if Apple does reverse, then anticipate the NASDAQ to also, NASDAQ to composite and the Dow and the S&P to also benefit from the direction Apple goes because of the weighting issue. So Apple would be almost one of those, if you were, trading it, you could almost look at, if you wanted to be a long-time holder of Apple, you could in fact go in and say, hey, I'm going to sell next week's 125 put on Apple, and since you want to buy it anyway, if you're willing to buy Apple at about 125 to whatever you would get for the 125 put that expires next Friday, and if you do get a rebound, you'll get a real quick profit on that. Let's see how ain't it? Nope. QI2. Yeah, QIHU is one I've also been watching. Let's see what we've got going here. If QIHU finishes where it's at today, you got this little pullback on decreasing volume, but today's volume hasn't really totally clicked in, but you're bouncing off to 20. You've got this good support down here at the, about $59, $58, somewhere like that. And so it has turned up. Concerns will be basically is our momentum actually, is it too late on momentum? Here's another concern. If this rolls over, what's it likely to do? We have put in a higher high. And so if we are seeing a rollover on stochastics and a potential rollover on true strength, the weekly momentum has not totally kicked in. What we may be seeing is that we may get a little bit of a pullback, could be all the way back to the 20-week moving average, and then a rebound from there. Was Apple's a cup pattern? Yes. Let's see here, ENET. Let me get rid of my other drawings. ENET, what we're looking at here. I got a couple of things going on. Move that drawing. One, you can basically come in here and draw a nice trend line connecting the highs here. So we know that we've got that going on with ENET. We know that we have earnings coming up on the 14th of May. It does okay for its. Let's see here. Yeah, it's got average over 500,000 shares per day. Is it going to basically hold this level of support here, which kind of coincides with probably this bottom and this bottom and this top of the body corresponds with that? Are we going to basically get a reversal? Because it wouldn't be surprising to see ENET take off from here with a bullish move and move back up to this line prior to earnings. But that would be a very quick hold. Okay. Blue. Bluebird Bio. Again, Judy, this is one of those that I have to go back and look at the do the stock review, the stock checkup with IBD to see what it's doing. But it's showing a nice little pattern here. You've got earnings coming up. Could very well see this one breaking out above 141.80 prior to earnings. This is positive. The true strength indicator turning back up. It looks like the momentum's trying to tick up a little bit, and we could be in a sideways move here. So if we break above the 140 level, it could very well move to 150 prior to earnings. But just remember, when you do have earnings coming up in about, just about 2 weeks. Okay, if you've been trading that one in and out, yeah, I mean, you've got a nice little range here from 130 up to 140. And if it breaks out, then the 140-ish becomes your support line. ML in X. Okay, just had earnings on this. You've got basically a trend line going up. Oh, let's see. Yeah, something like that. You're getting, things are sticking its nose out below it. But anytime that you get a stock that's kind of doing this, where you look for the bodies and draw your trend lines in there, because sometimes it respects it, but the volatility of the week may pull it down below it. But definitely that is showing that that's a level of support. What do we got going on for the weekly? On the weekly, we have, if you got in at 49, so you must have taken the breakout here. And if that was your entry, well, depending on where you put your hard stops and all, with regard to whether it's 7% or that should, of course, 7 to 8% should be your guide. But you've also, if this fails in this area here, that may be a good reason to get out. 49%, 49. 49 gives you a 7% stop loss at 45.57. So this is looking, yeah, it's a little bit of its momentum is starting to come out of it, and it's not really jumped back on board. What's just under 500,000 shares per day on average. But the good thing is you are past earnings, and it is in a nice little uptrend. Okay, Habit did earnings last night. They liked them. However, now we've got a level of, Dorothy, what you can do on Habit is basically draw in a trend line like that, which kind of covers this aspect. And right now, as long as this new uptrend, because now you've got the 50-day starting to move up, we know we have a strong level of resistance that's up here in, about, let's see. Let me draw your resistance in there, about there. And I'm taking the body off of that candle. Let me get that drawn in. I'm taking the body off this candle right here. That has been past resistance. And so if we get a close above there, we could continue to launch higher. And so if you're not in the trade, I would look for any type of pullback into the, towards this line here, or you can take the $34 level. And also you can also wait for the indicators to show that you're in a reversal zone, and then wait for the reversal candles to take place. So any more stocks, folks? Okay, with that, we will call it a day. I will get the recording. Oh, GILD, yeah. Goldwinder, I hope I'm saying that pronouncing your name correctly. One last one, GILD. GILD, looking at the stock a little bit earlier on today, we had earnings yesterday. It was aftermarket, and we got a nice rebound today. And so is GILD back in, moving back up, and need to be watching it. You can trend it across here. Got a couple of trends you can do here. You've got that trend that it broke out of today very nicely. And now will it will have a level of resistance though, back here, up here about the 107 level. And so if it, you can view this as kind of a, not a real, it's an okay cup shaped pattern. But yeah, buyers did come in with the earnings, and it's up what? About $5 from what it closed at last night. And so I would be, and you got volume coming in. So this may be early on a rebound move. And so I would be utilizing your clues off of the daily and weekly charts, so that if it came back down to about 103, I'll draw this line in here off this, and this will be the last one. But if it came back down to about this level, 104 level, or even back into the whole moving average / the 20-day moving average, or even the 8-day moving average, because as you can see, today's candle actually changed the whole color to green. And so any type of a rebound there, you can actually trade off of that potential rebound. So with that, everybody have an awesome weekend. And we will chat with you next week. We look forward, and again, thank you very much for joining us. And have a great one. Keep growing the egg.